Joining me today is financial trader David Paul. Thanks so much for joining us. For somebody that may not have heard of you, how would you explain yourself to our viewers? How would you like to introduce yourself?
Okay, well, thanks for having me. It's a pleasure to be here. I am a financial trader. I started to trade markets purely by accident. In fact, I went in 1981, I went from London here to South Africa to play rugby, to play professional rugby, and I was billeted into an office with an old fellow who started life in Cornwall, but had been in Africa for a very long time. And every day he did a very strange thing. He would walk to the corner of the office and he would pick up a drawing. I thought it was an engineering drawing at the time, but in fact he would put this onto his drawing board, and out of the paper, the Rand Daily Mail, during the course of the morning he would update 40 or 50 shares that he was following by hand. The charts were a work of art because although he was a metallurgist at that stage, he started life as a draftsman, and his charts were absolutely pristine. He would, in fact, by hand, from the newspaper, plot the high of the day, the low of the day, the closing price. At that stage, stock markets of the world didn't report the opening price, and the volume traded. And from that, he was making decisions in the stock market using a tattered old book called Technical Analysis of Stock Trends, written by two guys called Edwards and McGee in 1948. And it's still the Bible of technical analysis and old-fashioned charting. I watched him. In 1981, the only thing I was interested in was chasing a rugby ball. But I watched him, I saved up some money, and on October 1982, I put on my first trade. And they say that if your dad takes you fishing and you catch a fish the first morning, well, you fish for the rest of your days. Well, it was a winning trade. It was in a company you probably know, South African Breweries. Yeah. And InBev these days. I traded while I worked for De Beers in South Africa from 1982 to 1988, and in April 1988 I cut the corporate umbilical cord for good, and I've been trading on my own ever since. I've had spells at the institutional level over the years, but it doesn't suit me. I'm happier trading on my own, and that's largely because some days there's nothing to do. For example, we've got Yellen speaking, testifying today and tomorrow. Prior to that, markets are dead. If you work at the institutional level, you've got to sit there and sit there and sit there. If you're trading flow and if you're a market maker, that's great because there's always something to do. You can make the spread all day. But if you're a proprietary trader, there are times where there's just nothing happening, and I'm happier in the gym.
Now, on your CV, it says that you have a doctorate in mechanical engineering. Have your studies helped with your trading?
Yes, I suppose they have. I have a PhD in mechanical engineering. I think in trading you need two things. You need information and you need self-awareness. And certainly my background as an engineer has helped put those information channels into place. I think that when that's in place, it becomes quite a small part of the puzzle, and self-awareness is everything. And there's an awful lot of trading psychologists around these days. In fact, I think there's probably more trading psychologists than there are traders. But it's really, really important that you get those two little facets in place, information and self-awareness. So it has certainly helped in the first.
So we heard about who was your inspiration to start trading, but how did you actually start to trade? What was your first trade, and how did it continue?
Well, the first trade was, I've always been, and it started off as a technical trader because that fellow that I mentioned was a chartist. So I've always been a technical trader. Most people, when they start trading, they start trading with the fundamentals and then they move to the technicals. Well, in fact, I've done it the other way around. I started with the technicals and now I've embraced quite a few fundamentals, especially in stock trading over the last few years. I look for trends. My definition of technical analysis in the stock market or any market is that it's a study of trends and turning points. So I look for a trend and then I look for an elegant entry into that trend using some form of technical pattern. This can be a breakout pattern, very simple patterns like triangles, ascending triangles, falling wedges, etc. Or more complicated patterns which are based on the Fibonacci sequence, and I've developed quite an understanding of the Fibonacci patterns to get yourself into a trend at a really good place. I've also studied the work of a fellow called Richard Wyckoff. And yesterday, in fact, in the euro dollar, there was a classic Wyckoff upspring on a 30-minute chart, which in fact precipitated the euro to fall quite strongly for the rest of the day. I think that you could make a living on Wyckoff upthrusts and springs, but the problem with them, like any other single technical pattern, is that they come like London taxis. You get 6 of them at once, and then you don't see them for a fortnight. And you would get bored if you only traded the one. So I'm looking to define a trend, and then I want to try and buy into that trend at an elegant place. I said that there's 3 rules in trading.